Funds can also be classified as active funds and passive funds. There are two types, active funds and passive funds. It is based on style of management. By style of management, in the sense how frequent the fund manager is buying or selling shares, what kind of stocks he is investing. This is what we mean by style of management, and based on style we can classify it into active funds and passive funds. So let us start with passive funds. Passive funds. Passive funds are funds which generally follow buy and hold strategy. In the sense, the fund manager will invest in a particular stock and he will hold on to it for a long term. He will not indulge in frequent trading kind of stuff. He will not indulge in frequent buying and selling. So obviously he buys and keeps it for a long term. Such a kind of fund is known as passive fund. One variant among passive fund is index fund. We will see about index fund later on, but I will tell you one more fund which comes under passive category, which is FMP, fixed maturity plan. Fixed maturity plan is a debt scheme. In fixed maturity plan, the fund manager sees to it that the scheme maturity and the bond maturity matches. FMP is a closed-end scheme. It has a fixed duration. It can be say 1 year or 2 years or 3 years. So fund manager sees to it that, say for example, in case of 3-year FMP, he sees to it that bonds mature in 3 years, or he will invest only in bonds which mature in 3 years. So the fund maturity and the bond maturity should be same. Such a kind of idea is known as FMP, fixed maturity plan or fixed term plan. So this is again a passive fund because there is no churning involved. The fund manager buys a particular bond or a fixed income security or a portfolio of fixed income securities, and he will hold the bond or bonds till maturity. So it is again a kind of passive fund. And next we will see about index funds. Index funds are a particular type of funds which is very important for you from exam point of view. Thank you.